All right, S&P is running into a little bit of pushback here today. We're still talking basis points. Anything could happen before the close. Kevin Green joining us for a look at the options flow. KG, we going to be able to turn this ship around before the close? It's only like 20 bips.
Yeah, it's not as aggressive as we saw yesterday, kind of ramping up to the close, Oliver. This does seem like it's a little bit more of a compressed market. In fact, I think we've only ranged out around 30 to 35 points for the S&P 500 total for today, and that's going to be one of the lowest levels that we've seen all month, and even some of the lowest levels that I believe since July 26th, if I'm not mistaken here. So once again, we're seeing some compression, but we did see some buyers kind of stepping in at the 55.90 level and then selling at the 56.10. So the dealers are really kind of doing their thing here. But when you're kind of looking at the open interest, like we have this histogram up right now, what I found very interesting today is actually that positive gamma level actually did move up to 5,700. So we did see some continued rolling of contracts yesterday, as we kind of talked about, and that's really the strike that they picked. Notice that they didn't really immediately go up to the 5650 level. They went right up to the 5,700, which is once again bullish. And we've been kind of following these flows of calls rolling up to the upside pretty much every single day, and they've been on point to say the least here, but a nice little reaction to the upside. On the downside, still not seeing a lot of protection, but we did see some adjustments. If you're kind of looking at the open interest chart, we actually did see negative dealer gamma actually moving up to the 5,500 level. I kind of called that out yesterday. You want to kind of start seeing that being moved up here a little bit, and rightfully so it did. So your intermediate level is right where we're at right now, 5,600. We're kind of ranging out here for today, consolidating. Let's see if we're going to be able to continue to break to the upside. And the positive dealer gamma level is sitting at 5,700. So we had a 100-point move up for the upside. We had a 100-point move up for the downside here. We're trading pretty much right in the middle, and it's really matching what we actually saw last week, Wednesday, where we had a nice little pop, then we kind of ranged out for the most part, kind of in this triangle or wedge type of pattern here, and then we had that massive breakout to the upside, which really fueled this rally over the next couple of trading sessions. This appears to be setting up in the same type of manner if you're just looking at the technicals and not even focusing on the gamma levels right now.
So did we kind of widen out the guardrails somewhat in the last 24 hours? Is that what happened? Kind of push the positive and negative up and down?
Yeah, so the guardrails themselves, they actually are still equidistant from each other, what we saw previously. It's just everything kind of moved up at the same time, which is great,
okay.
Right?
Translated.
So you're exactly. So the negative gamma level moved up 100 points, positive gamma moved up 100 points. Once again, they're still around 200 points away from each other, and we're sitting right smack dab in the middle. And this middle portion here still has a significant amount of positioning that's there. We don't want to ignore it, and this is why we are seeing some pressure here right now. And we'll see if we're going to actually break up to the upside or break to the downside here. It's going to be a little bit of a battle, but just kind of knowing that 650 area has not been identified as a significant area of resistance to the upside. Now it's 5,700, gives you a little bit more room for the S&P 500 to move higher. Now, if we have a reversal for whatever reason, 5,500, you want to obviously focus on that here, but you want to kind of be able to manage that. You don't want to break below 5,500 at this point, because then you could actually have the technicals kind of matching up with the breakdown in price action, and that could actually increase selling activity for the S&P 500. Obviously, we want to avoid that at all costs if possible.
Okay. So it seems like everything has basically gone exactly the way you would want it to. The stair-step nature of the levels being continuously raised, the kind of tolerance thresholds moving in a bullish fashion. What would look like an aberration? What would look like something softening? Would that be just kind of generally more put positions building up, or what? Like, what do we need to be on the lookout for here, KG? Because it's been so steady, so stair-step.
Yeah, so if you see an increase in put positioning that's closer to at the money, that's where you would have that first sign. Then you're going to also look at liquidity. Are we starting to see liquidity kind of drain to the downside here? Lack of liquidity creates volatility, no matter if it's upside movement or downside movement. But usually when you see lower liquidity, that also does translate to maybe the market weakening here. If we see a consolidation for more than 3, 4, even 5 trading sessions around this area, 5,600, you would also then get concerned. We don't have a daily chart up right now, but what I will say is if we probably will look at one later in the show here, the candle that's being developed here today is kind of a spinning top. right? So you have a very small body, very low range. You don't like to see that. That could be a sign of an immediate reversal. We don't really have the volume to support that notion yet. But if you start getting those spinning tops, larger volume, more selling volume hitting on the bids, that's where would be your first indication that maybe we would maybe we see a near-term peak. We don't have that now. Those are just the characteristics that we would be focusing on, not only from options, but also from a technical standpoint.
Got it. Okay. And then that spinning top candle, that literally is like the little toy you spin around, right?
Yeah.
Okay.
Correct. Yeah. So you have you have wicks on both sides, and then you have a very small body, basically meaning that you opened up and you closed at relatively the same level, maybe a couple of points to the upside, maybe a couple of points to the downside. That's where you kind of have those, where it makes it look like the market is indecisive when it comes to the next action that it wants to take. Now, if you have that on very low volume, maybe you can negate that a little bit. But if you have higher volume or very large volumes, and it coincides with that type of candle, that does indicate that maybe we have a near-term pullback in the making, rather than us continuing to try to track to the upside, which when you're looking at 8 days in a row, that's not bad. To see a little bit of pullback actually probably would be healthy right now.
Yeah. This is, it seems like as good of a down day as one could ask for, basically just going sideways. When you look at the potential for records here, which I think we're basically now talking about, when it's only 70 points away. I thought what was interesting about this, coming back to your dealer exposure chart with the open interest, is that the positive gamma level is above the old high for the S&P. Yes. So it's kind of like the market makers are already thinking about breaking out.
Well, institutional traders are. And so when we talk about these levels, I think this is a really good segue too. So when we talk about these levels, what this is really meaning or showing is there's a lot of call selling premium happening at the 5,700 level. If I'm an institutional manager and I manage a portfolio, you're selling upside calls and you're buying out of the money downside puts to protect downside, but also then to be able to scalp basically premium to fund that downside protection. And you want to be able to continue to incrementally move up to the upside. And as you're doing that, you're rolling your positions up. You're rolling those calls, out of the money calls up. You're rolling those out of the money puts up as well. So the dealers themselves really don't have to really take any type of aggressive action unless we have a vol spike like we saw a couple of weeks ago, or in the event that we get closer to either that upper end of the range or the lower end of the range.
All right. Thank you, Mr. Kevin Green.